Hello everyone, my name is Efryn Sinaga from the Accounting Study Program Class AKT 23A. In this video, I will explain about fraud in companies and prevention in corporate governance. Fraud is one of the major problems that can harm companies financially and damage their reputation. Therefore, it is important for companies to implement strong corporate governance in order to prevent and detect fraudulent activities. Fraud can be defined as an intentional act of deception. This is carried out to obtain personal or financial benefits. In the business world, fraud often involves manipulation, misuse of company asset, or falsification of financial information. Fraud can cause serious financial loss for a company. In addition, it can also damage the company's reputation and reduce trust from investor, customer, and the public. Therefore, companies must develop effective systems to detect and prevent fraud as part of good corporate governance. There are several types of fraud that may occur within a company. The first type is asset misappropriation, which refers to misuse of or theft a company assets such as cash, inventory, or equipment. The second type is corruption, which involves abuse of power for personal gain. Examples include bribery, conflict of interest, or illegal commissions. The third type is a financial statement fraud, which involves manipulation of financial reports in order to present a better financial condition that can actual situation. Fraud can occur due to several factors. One common cause is weak internal control within the company. When monitoring systems are not strong, employees may find opportunity to commit fraud. Another factor is pressures such as financial problems or unrealistic performance targets. This pressure may encourage individuals to commit dishonest action. Opportunity is also plays a major role. If a person has access to company research without proper supervision, the risk of fraud increases. In addition, the lack of ethical culture within the organization can also contribute to fraudulent behavior. To prevent fraud, companies need to implement strong corporate governance practices. First, companies must establish strong internal control systems to monitor financial activities and operational process. Second, effective supervision and monitoring are necessary to ensure that company activities are conducted according to rules and policies. Third, companies should promote ethical standards and encourage employees to act with integrity. Finally, the role of auditing and transparency is very important. Internal and external audits help detect irregularities and ensure that financial information is reliable. In conclusion, fraud is a serious issue that can cause significant financial and reputational damage to companies. Understanding the types and cause of fraud is important so that companies can develop effective prevention strategies. By implementing strong corporate governance, companies can reduce the risk of fraud and maintain trust with stakeholders. Thank you for watching this video. I hope this explanation helps you understand the importance of fraud prevention in corporate governance.